Hi everyone, welcome to today's webinar on COVID-19 and financial reporting. So just looking at the agenda for today, I'm going to start off with a brief introduction. So I'm Catherine Patel, a partner at Buzzacott's charity and not-for-profit team. I'm going to start off with a brief introduction. I'll then hand over to Amanda Francis, who will look at the Trustees report in relation to the impact of COVID-19. Saatchi will cover the accounting implications. Eddie will cover the audit implications, and we should then hopefully have time for a Q&A session at the end, aiming to close by about 5 p.m. or just after. So just before we go into the main session, just on housekeeping, if I could just ask that everybody keeps their cameras and microphones off during the webinar, please. If you do want to ask questions at any point during the webinar, you can do that via the Q&A chat function in Teams. It's available on the right-hand side of your screen. It looks like two speech bubbles with a question mark in it. So if you just type a question within the chat function, that will be available directly to us. If you could just also say who you are in there, just in case we don't have time to answer your question within the session, we can then follow it up afterwards with you. But we will try to address as many questions as we can during the event, and all questions will be kept private. Just finally, just to note that the seminar is being recorded and will be available to watch after the event. So just turning into the overall introduction. Before going into the detail, we're really just looking at some of the things that you're going to need to think about in terms of financial reporting and audit for this year. So turning into the first slide. So it's probably been said too much, but we are in unprecedented times. Potentially a huge impact on charities with the event of the coronavirus pandemic across a charity's activities, and really looking at all areas. So the continuation of the delivery of services to beneficiaries, grant giving, fundraising activities, investment performance and valuations, staffing, the need for people to be working remotely, and this is all falling at a time. Obviously, coronavirus has meant that there's an increase in demand for many charities' services at this point in time also. And really the degree to which it will be impacting upon your own charity, obviously dependent very much on your activities, the income generating sources, the spend of the charity, and also its asset and reserve base as well. So really for the trustees, in terms of governance, absolutely critical that the trustees understand how COVID is impacting the charity, the uncertainties that COVID is creating for the charity, and that this is built into your risk management processes, looking at how potentially you could mitigate some of the impact of these risks and uncertainties that are being created. So, for example, is government support available to the charity, and the extent to which you can tap into that. So it really means that more than ever, many charities or most charities will have to place even greater focus on financial planning and forecasting, and that's both the immediate impact in the short term, but also the longer term impact that coronavirus will have on the charity's activities and its finances. So critical there really being cash flow forecasts, understanding the liquidity of the charity, how can you make sure that the charity can meet its debts as they fall due, the reserves availability, the reserves targets and policy, and probably various scenarios having to be factored into that as well. And really that's also at a time when the majority of employees are probably working remotely, particularly support staff and finance staff. How are you ensuring the flow of information, financial information particularly, and communications across the charity, and also the operation of financial controls, so maintaining those robust controls relating to the authorisation, for example, in terms of procurement and payments, really again aiming to minimise the risk to the organisation. And then also in terms of planning, thinking about the usual audit, will that be possible shortly after the year end, potentially as you normally have that, and the access to supporting documentation for your auditors. Eddie will cover this in detail later, but really assessing whether your audit can happen as usual in terms of planning. So just looking at the financial reporting side of things, as all of this does have an impact on this year's accounts and the financial reports in terms of your annual statutory financial statements. So the Charities SORP Committee issued a document. It's a really quite short document looking at the implications of COVID-19 control measures and charity financial reporting. So really looking at those various areas where your accounts may be impacted this year. It links to the charity SORP references as well, so you can see where really the COVID document is suggesting that you build in the relevant narrative and disclosures to your accounts in the context of the SORP. It does say it's not mandatory to follow advisory, but we are seeing charities very much following this, and really it's setting best practice that we would expect charities to be following. So really this applies to all financial statements where they have not yet been formally approved by the trustee body. So really wherever you are in that process, but definitely to bring this in if you're at the planning stage for this year's accounts and audit. So it's really looking at the degree to which you need to include information within your accounts to explain the impact of COVID-19 on the charity, both from the narrative side within the trustees report, which is absolutely critical for the reader to be able to gauge the impact COVID is having now and potentially in the future on the charity, and also looking at the disclosures within the financial sections of the accounts as well. So potentially with impacts on income, expenditure recognition, looking at any commitments or liabilities that you need to bring in, and also the valuation of assets and liabilities as well. Also, the document recognises that if the implications are really severe of coronavirus pandemic, then actually there may be a risk to your charity's financial sustainability and potentially the going concern basis on which you're preparing your annual accounts. So obviously there are very much implications for both the accounts in terms of reporting, but also audit implications as well, linking into the work the charity will have been doing on its financial forecasts, budgeting and cash flow predictions. But I think really the key there is the transparency and clarity within the accounts, really key to ensuring that the reader understands where the charity is, the issues it's facing at this present time, the need for potentially additional funds if potential funders and donors are looking at the accounts. In your planning discussions, you may also want to consider whether you seek an extension for filing the accounts either from or from both the Charity Commission and Companies House. It may take longer to bring together the year-end accounts and the audit preparation, the conclusion of the audit this year, and yes, Eddie will say more in terms of the audit, but certainly something that's very possible to get those extensions. And then also really understanding in your planning what your auditors require. So what are their considerations? What additional guidance do they have to follow this year? If particularly where going concern may be an issue, there may be additional information that they will require from the charity in terms of audit preparation and delivery this year. So that's all I'm going to say in introduction. I'm going to hand over to Amanda now. Amanda will look at the trustees report in more detail.
Thanks, Kath. Good afternoon, everybody. Some of you will have heard me say at previous seminars that in many ways, when you're looking at the trustees report and accounts document, it's the trustees report element of that is the most important. It's important because it puts a context to the figures that follow, and it explains what those figures mean in terms of the work and the challenges that your charity is facing. Part of the purpose of a trustees report is to give trust and confidence in the charity, its management and its trustees, and never has that been more important than at times of crisis such as we're facing with COVID-19. So there are two ways in which your trustees report can actually give readers the trust and confidence in your charity that's so needed. The first is by you demonstrating that your charity has sound governance. That as trustees, you've identified the effect of COVID-19 on your charity and on its work. You've identified the risks that arise because of COVID-19 and that you've got an action plan for actually to implement, and that you can therefore address some of the problems and the challenges that will arise. If you can demonstrate sound governance, it will provide confidence to the reader, and that reader may be members of your own staff, it may be your volunteers, but it may also be those who are dependent upon your charity's services and funders who you are looking to continue to provide you with money. The second way in which your trustees report can assist with trust and confidence is through transparency, by you being as open as possible about the impact that coronavirus has had on your charity. By talking about the work and the way it has been affected, but also the financial impact on your income, your expenditure, and as Kath said a moment ago, on the valuation of some of your assets and your liabilities, and ultimately on your charity's long-term sustainability. And when we're thinking about timescale, when you're addressing these issues within your trustees report, remember that you have an obligation as trustees to think about at least 12 months from the date on which you actually sign this report. So therefore, when you're drafting your trustees report, you need to be thinking not just about what is happening now, but what is going to be happening in the medium to long term. And certainly for most charities who are in the position of drafting their report now, I would be suggesting that your trustees report, in terms of its description of the impact it's having on your organisation, should be looking ahead to the end of 2021 at the very least. So what do you actually need to address within your trustees report? It is entirely for you to decide how you do this, but if I were writing a trustees report, I think my preference would always be to have a specific section which addresses COVID-19. And that, I think, needs to contain 3 different elements. A general introduction explaining that this is something that has had global impacts, both socially and economically, that it's not something that affects your charity alone, but it has brought about serious challenges to your organisation. Secondly, to describe what some of those challenges are in terms of the way it's affected your operations and your work and the way in which you deliver your services. And thirdly, to talk about the financial impact it has had, both immediately but longer term as well. So on your income and your expenditure flows and on those assets and liability valuations. Having got that specific section, I think in terms of where you place it within your trustees report, I think if you have a year end that ended on or before the 31st of March, I personally will be putting that section after you've had the review of activities or a review of the year, because effectively it did come after your year end. On the other hand, if you have a year end that is later than the 31st of March, then you might want to put that section as a preface to your achievements in the year, so that you've got some context to perhaps towards the end of the year, things didn't quite go to plan. You will also need to link that section to other parts of your report so that everything pulls together. The other sections that you might want to think about are things like your reserves policy, where you talk about risk management and where you talk about some of your future plans. Now let's just unravel a couple of those areas in slightly more detail, beginning really with the operational impact that COVID-19 has had on your charity. This is where you get to tell the story of coronavirus and your charity, talking about the impact it's had on the demand for your services and the way in which you delivered those services, both now and in the short to medium term future. So, for example, have you got projects that have had to be postponed or even shelved altogether? Talk about the logistics of carrying out work. if you have no contact with your fellow workers, if you have to observe the challenges of social distancing. Talk about what it's probably meant if you've had to close your office and therefore probably stop some of your services or deliver them in innovative and new ways. And think about perhaps areas of your work where it has meant that there is now a greater need for your services and that your priorities might have changed. Talk also about the effect it will have had on your staff, your volunteers, and the people that work with you. Many of your staff will probably have spent the last 10 weeks working from home and dealing with the challenges that that has brought. Others will probably have been on furlough, and that will have meant obviously financial impacts on your on the charity and an impact on them and some of the services that they might otherwise have been providing. You might also talk about the way in which you have learned from different ways of working, and some of those lessons will continue because you might have realised that there are more efficient and better ways of doing things that we never thought about in the past. Some of your staff will have been directly impacted by COVID-19, particularly if you're something like a care home or a charity that works in social care. They will have probably been ill, you will have had staff who've had to self-isolate and so on, and you will have had staff members who've been under enormous pressure to continue to provide the services that are so desperately needed. So staff will have been working longer. Care staff may, for example, have been living in on the premises of care homes and so on. And longer term, it may mean that you need to look at possibly restructuring as we come out of this pandemic. It may be that you need to make some staff redundant. You may need to think about the way in which you deliver your services longer term. And that, of course, will have an impact on your beneficiaries also. So talk about your beneficiaries, how you've kept them at the forefront of your minds throughout this pandemic, making sure that you're there for them and that you can continue to serve their needs. If you're a membership organisation, whether that's members who pay by subscription for membership services or something like a religious congregation that has members that deliver the services, talk about the impact on those particular people. So if they've been in lockdown, how members who subscribe to your charity might have been able to access your services, been kept informed about what you're doing, and so on. And if you're a member of a religious congregation, your members will have been in lockdown and will have needed to carry out their work in different ways, so not face-to-face, but possibly greater use of telephone and things like we're using this afternoon, Teams or Zoom. And finally, perhaps to think about what it does mean in terms of your finances. Have you had to cancel fundraising events? What has been the impact on donors? Are you the sort of charity that will have benefited because of the type of area you work in? Or possibly the type of charity that might be more forgotten over the next few months as donors move their attention to those charities that are dealing in social care and so on. And of course, some of your funders will have also struggled during this period and may be more cautious about giving grants and financing projects going forward. And that might impact operationally on you, not just immediately, but in the longer term. So all of that really needs to be summarised concisely in a couple of paragraphs and put in your trustees report, referring to the impact that COVID-19 has had on your charity, its work, the steps that you're taking to address the uncertainties that exist, and how you are managing the situation and therefore providing confidence to the reader that everything is under control. Now, as well as giving you some information, I've also tried to give a couple of examples, and the example I've used throughout is that of an independent school. And so this is really the operational impact that independent school has explained in its trustees report. Just explaining, as I said, in a general introduction, explaining that this affects everybody, but then talking about in terms of the independent school, the impact it's had on having to provide learning from home for the pupils, making sure that safeguarding requirements continue, and making sure that parents are regularly kept up to date with what is happening. And obviously many schools will have kept their doors open to cater for the children of key workers. In terms of financial impact, this does need to give some detail as about the immediate impact on the income and expenditure flows of the charity, but also to look ahead, particularly I think to the end of 2021, if not beyond. So when you're thinking about this, you've probably prepared budgets and projections, and they really need to be converted from figure form into a narrative form so that you're explaining to the reader what is happening to your income. Are your grants under threat? Are grants being reduced? Are they being deferred because the work is also being postponed? If you're reliant on investment income, what is the impact on your dividends and interest going forward? Many investment managers, although they predict that perhaps capital values will come back, they are suggesting that the impact on income will be more severe and that there may be something between a 25 and 40% drop in income over 2020 and 2021. So what impact is that going to have on your charity and how are you going to address it? I talked about fundraising and donations. Is that going to cause you some problems? Is the money that you are dependent upon from your donors going to drop dramatically? And how are you going to deal with that? If you're the sort of charity that charges for its services, if those services have had to be stopped or reduced in terms of quantity, there will have been an impact on the related income. And similarly, you may have some additional income from various sources. In particular, if you have furloughed staff, then the contribution that you're receiving from government will be a source of income. In terms of your expenditure flows, what do you need to think about? Well, certainly staff costs for many of you will be a major expense, and whether you've made use of the furlough scheme will impact on your expenditure. Projects and services may have to have been closed or deferred, and that will possibly just change the timing of your expenditure. Now, similarly, if you're a grant-making charity, as I said a moment or two ago, you may be slightly more cautious and perhaps be reducing the amount of grants that you give out and being more careful to make sure that you can properly afford to make grants in the longer term. You need to think about the impact that income and expenditure has had on your assets, not just your cash, which is the obvious one, but as I said, investments have moved. Those of you who have investment portfolios will have seen that in the 3rd and 4th week of March, the investment markets panicked somewhat. Now, those values have come back since the year end, but that doesn't mean that we're out of the woods as far as volatility is concerned. Similarly, you might have been considering selling one of your properties. You need to think about the impact of property values of COVID-19 and whether that means you might defer that property disposal. If you were owed money before COVID-19 struck, what impact has it had on the people that owe you that money, and is that still recoverable? And similarly, if people had paid you in advance for events and things that you were planning to do but have had to cancel because of coronavirus, then you might owe them back their deposits or the money that you'd received in advance, and so on. Now, the idea of explaining this really is to give the reader an idea as to what it means in terms of your cash flow, because many organisations that go out of business because they run out of money rather than they have net liabilities. So explaining the impact this is all going to have on the way and the amount of money you've got and the timing of your availability to that money. That might lead you on to talk about some of your future commitments and whether the monies that you've designated in prior years are still sensible designations, whether those projects may have been cancelled or postponed, and whether those designated funds are really needed for your general reserves. The overall idea behind this section of the report on COVID-19 is really to talk about the overall financial sustainability of your organisation, and hopefully to give some comfort to the reader that the charity is a going concern. And again, I followed that up with just an example. I'm fully aware that the text on this slide is relatively small, so you may not be able to see it at the moment, but we will be distributing these slides after this webinar, and I'm hoping again that you'll be able to read it. But it continues my example of the independent school. It talks about the financial impacts in terms of their income and its expenditure, and what it means generally in terms of its finances. So I will leave you to read that in your own time. Just finally to mention just a couple of those other areas that you need to cross-reference into your section on COVID-19. First of all, your reserves policy. So you may not be in a position to meet your reserves policy over the next couple of years, or you may even be thinking about refining or changing your reserves policy, dependent of course on what those financial projections show. But you might want to think carefully about what funds you've got designated, and if you are not meeting your reserves policy at the current time, explaining about how longer term you still have a plan to ensure that you can do just that. In terms of risk management, you will be aware that you always have a section in your trustees report highlighting the key risks. I don't think very many charities would have highlighted the risk of coronavirus prior to the beginning of this calendar year, but now that it's here, it does either introduce some new risks or it heightens others. So again, you need to think about whether areas of your risk management text need to be tweaked or cross-reference back to your paragraphs on COVID-19. And certainly some of your future plans may now be different to what they were 6 months ago. So you may need to tweak those in terms of delaying projects, possible restructuring of the charity, and rethinking some of the methods in which you deliver your services going forward. And so just to finalise and to bring my example to an end, you've got again the independent school, just highlighting the ways in which some of the risks that they've identified have been heightened or changed because of COVID-19. I would just conclude by saying that the trustees report is an incredibly powerful document for reading and informing readers and reassuring them that you have everything under control and that you have a plan for dealing with some of the challenges that no doubt you've already addressed and others that lay ahead. Thank you. I'm now going to hand over to Sachi, who's going to talk about some of the accounting implications. Sachi.
Okay. Thank you, Amanda. Good afternoon, everyone. Before I go through some of the points of detail about specific areas that may impact your accounts this year, if we can move on to the next slide, which sets out the points I'll cover. And yeah, before we move on to the points of detail, a couple of principles that I just wanted to discuss. Some of the areas that I'll talk about, whether they have an adjusting impact in the accounts or they are a disclosure matter, will really depend on your particular year end and the relationship in terms of when you believe that COVID started to have an impact on your organisation. For most organisations, I think they will deem the sort of lockdown day as that cut-off, that curtain, but I'm very mindful that there will be charities who began to feel the impact of COVID prior to that date. So I think the key message in that is whether something is an adjusting event in the accounts for this year will depend on whether the condition, i.e. the condition of COVID and the lockdown, existed at the year end. The other key thing to mention is that the accounting standards themselves haven't changed. There hasn't been a relaxation to say that actually certain things can be treated differently. So the principles within the charity SORP about income recognition, that the income's going to be probable, you have to be entitled, i.e. meet the conditions for the income, you need to be able to put a value to it, all of that applies. And similarly on the expenditure side, the rules are pretty much the same, that there has to be an obligation, you have to be fairly certain of the quantum, and so on. So the key thing this year really is that what's brought into sharper focus is the sort of the piece around accounting estimates and judgments. So just to give you a few examples, I mean, Amanda talked earlier about debtor recoverability and thinking about disclosure within the sort of financial impact within the trustees report. The issue with debtor provision is that obviously it requires an element of judgment. And usually when you come to the year end, you've got a period of certainty, you've got some historical information to base it on. But since we're now in a greater period of uncertainty, so to speak, that debtor provision will need closer review at the year end. The other area is if your charity is a recipient of legacies. Legacies by their very nature are inherently uncertain. From the date you receive communication to the point at which you receive the money, there's a whole sort of administrative period, which makes the process delayed in any case. And often it might not just be cash amounts that you receive, it will be, may well be actually a property, maybe investments. And both those factors, if you think about the current situation we're in, it may be that the administration is even more delayed, or it's actually rather difficult to put a value on that property. So if you have made accruals, accrued income for legacies, it's worth revisiting it this year end to see if it's still applicable as it stands. And I suppose the final example on the accounting estimates and judgments is holiday pay accrual. I think any organisation has had to think about allowing its staff to carry forward some of the leave because people haven't been able to take holidays. So again, the figure this year may well look different and will need thinking about. Other areas which aren't necessarily to do with estimates or judgments, but just the period we're living in means that there's a sort of crystallisation of certain things that wouldn't ordinarily happen, which means that you need to think about how you treat these areas. And I've used the term sunk costs, and to use the example that Amanda talked about, events, if you're a membership organisation, you usually plan for events, not just maybe a year in advance, 2 years in advance of when it happens. So therefore, in a normal period, when you get to the year end, you'll have costs that you're carrying forward to match to the point at which you recognise the income. Some of the organisations I work with have been fortunate to actually defer that event a bit down the line, but in some cases they've actually had to cancel the event. So it's really looking at the cost you've incurred in relation to that event, whether it's cancelled or it's taking shape in another form down the line. Are there costs that you simply just need to write off this year that ordinarily you would have been carrying forward as prepayment? The other example is sort of grant commitments, and I work with a number of grant makers, and many of them in this period are taking a more lenient approach in terms of the grants that they've made to their grantees, because naturally a lot of the grantees are struggling, and so the conditions that they would have put in the grants to begin with are actually being relaxed. So again, in terms of how you treat those grants at the year end, may well be different in terms of the liabilities you recognise than you may well have done previously. In terms of the furloughed grant scheme, and if you are the recipient of the grant, you've applied for it, the question that it's been raised several times is where do I show this income? And is it right for me to actually net it off against staff costs? And the answer is actually you can't net the two off. You still have to show the costs as they're being incurred within your staff costs, but you show the furloughed grant within the income category. So the income and expenditure is shown gross. And if we can just now move on to the next slide. I just want to finish off talking about assets and liabilities, and obviously we've mentioned that, you know, some of the values in relation to assets and liabilities will potentially look different this year. So one of the areas that charities are required to look at each year, irrespective of whether we're, you know, COVID or no COVID, so to speak, is that when you get to your year end, you have to be comfortable that your fixed assets value is right. So if, for example, the recoverability of those fixed assets has changed in comparison to the net book value, you may need to think of writing down the value in the accounts. Given the period we're in, it may mean that recoverable amount has actually changed. I suspect for a lot of charities, it's not so much about the fair value of the fixed asset property in any case, it's more about value and use. And therefore it may not be an issue. But all I'd say is when you're looking at that piece in preparation for the audit at the year end is really to think about whether there has been an impairment to your fixed assets. In a similar light, investment properties you need to recognise at market value at the year end. And a few weeks just after lockdown, RICS actually issued a statement saying that this year most surveyors will not be able to issue a valuation without a sort of caveat. A caveat being that actually we're living in a period of uncertainty and that therefore it's just not as easy to be precise about the value at the year end. And what this really means for charities is actually to how do you go about disclosing that uncertainty in the account? And this is one area, indeed all the areas I mentioned will mean having a detailed discussion with your auditors at the planning stage. But this is one area to actually have a discussion as to what do you say about that uncertainty and where do you say that in the financial statements. In terms of listed investments, as Amanda alluded to, the sort of the increase in volatility of investments, what I would say is that actually the monitoring process of where those investments lie needs to go on up to the period of sign-off. So if at the point of sign-off your investment values are still significantly below the date of the value at the year end, because you need to include your investments at market value, we've certainly been advising the charities we work with is to actually talk about what the value of those investments are at the point of sign-off. So it's a disclosure rather than an adjustment. And then the final point I just wanted to make was bank loan covenants. And if your charity has a bank loan and that loan comes with certain covenants, many charities may not end up with financial position that they initially anticipated pre-COVID, and that may have a bearing on the ability to meet those loan covenants. And the key thing is, even if your bank is going to be able to waive that breach of bank loan covenants, it's important for the financial statements that you're able to get that waiver letter, so to speak, the support from the bank before the year end, because if it doesn't crystallise before the year end, it possibly means showing the entire bank liability within 1 year, which I'm sure most organisations don't necessarily want to do so. I suppose the summarising point I have is that it's previously things may have been more binary in terms of how one treats a certain area, and we're just living in such a period of uncertainty that there are a lot more shades of grey that need consideration for this year's financial statements. On that note, I am going to hand over to Eddie. I think just to say Eddie's having problems with sound, so we're just about to sort that out.
Sorry, problems with the microphones. We've got a few Q&A. I think Eddie's having a few issues with his sound, so we've got some Q&A that it would be good if we cover a couple of questions, and hopefully by then Eddie will have resolved it. So we had a question just in relation to Amanda's section on the trustees report. So the point that was raised that was budgeting at the moment is really finger in the air stuff. I've prepared 3 versions, most likely best case, worst case. How do I write about the future in the trustees report when we don't really know what that will be? Amanda, maybe you could just respond to that.
Thanks, Kath. Thanks, Kath. It's a really good question. And I think, Anne, you're doing exactly what many charities are doing, in that many charities are providing or producing 3 different sort of predictions. One might call an optimistic prediction, so that everything is virtually back to normal within a couple of months from now. Secondly, a pessimistic one, which is probably that things are far from normal for the rest of this calendar year and probably for the start of 2021. And then normally somewhere in the middle, that who knows, that might be the actual realistic prediction. I think the key thing is that where things are very different depending on which of those 3 scenarios you're talking about, is to be very clear in your trustees report what the assumptions are that you've made, and possibly to give a range also of different impacts depending on whether things get better quickly or whether we're still in lockdown and some degree of social distancing in 6 to 9 months' time. So I think it's all about transparency and being open. You know, you can't get across to everybody absolutely everything, but I think the important thing is to give them the context in which you're actually making the statements you're making.
Thanks, Amanda. I think Eddie's now back with us, so if we just go back to Eddie and the audit implications.
Thanks, Kath. I'm so sorry about that, everybody. My screen was actually not responding to me trying to click a button, so I couldn't switch my microphone on. I think I'd like to start really just by saying that we've heard a lot about how much thought might need to go into some aspects of the trustees report, some aspects of the accounting presentation, and from a couple of the things Saatchi said near the end of her presentation around how we might present things like furlough grants, whether we present idle time as charitable spend or some other kind of cost, for example, really just makes it clear that this year, more than many others, actually we need to start a conversation early between auditors and accounts preparers and keep that conversation going throughout the process about things that we might need to do differently this year compared to other years, and that kind of advanced preparation and understanding of what's expected will mean that hopefully, as we always aim to do, we get things right or in a way that we can all be happy with first time, rather than having to make a lot of changes towards the end of the process, which I'm sure many of you have experienced is never a happy place to be. So in terms of the audit timetable, Amanda and Kath have both alluded to things that might slow processes down. Kath talked about filing extensions, and Charity Commission, Companies House and others are all willing to consider extensions of up to around 3 months currently. And there are various reasons why you might want to think very carefully about whether to apply for those, even if it's precautionary rather than because you expect to actually use it. A lot of charities are finding that even though their UK head office, for example, can access accounting systems remotely quite happily, some of our overseas development clients have found that having sent all their staff home under lockdown, whilst in theory their accounting system can be accessed remotely, home broadband isn't necessarily as reliable for their teams and things like that. So actually, have you got access to your accounting data yourselves to begin preparing the accounts is a good place to start in terms of thinking about whether we need to vary the audit timetable. Stuff around, are the trustees available, who's going to be drafting the narrative, etc. A very important one for a couple of our clients has been if you have had to furlough a lot of your head office staff, are there actually going to be enough people around to get all the accounting done, as well as think about dealing with year end, for example. So there's a lot for us to talk about in terms of practical, just day to day, can we actually still work to the same timetable we normally would have? Everybody accepts across a wide range of regulators that it'll be more difficult for organisations to stick to the usual kinds of deadlines this time. But the kind of things you'd really need to consider specifically to your own organisation are things like fixed AGM dates or things in your constitution you might need to vary. There's some very good guidance on the Charity Commission's website about how you might have to consider breaking deadlines that you've historically considered sacrosanct, like AGMs and things like that, but that when you do go to do things like that, you really need to document why you've thought about doing things like that. So I think from an audit point of view, as I say, that the key thing is really keeping in touch and us being able to communicate about what's realistic and deliverable. And some of the issues are our side, which I'll come on to in a second, but we have to recognise that a lot of it might be simply on your side of the fence. It's going to be difficult to produce anything for us to audit at the same time you normally would. So moving on to the things that are more under our control on the next slide. I wanted to break things up a bit, and rather than bore you to death with death by PowerPoint, I thought I'll try and find some nice images to illustrate my points. And we were taught when I was younger that the main audit assertion spelt the word cave, or if you include a disclosure, caved. So I Googled cave for images, and the first one really I think is quite illustrative of a couple of the points I'll be trying to make. One is, I think it's a bit evocative of us all coming out of lockdown, emerging from our own little caves just at the moment. But the other is, if you think about us trying to do the audit from where we are, an audit where you are, we've got a very different view of you to the one we might normally have potentially. And for all we know, that could be a view of a nice little park in the middle of a big city. So I think that the kind of issues we're going to have are that we have to think a bit creatively about how we can get the same view and the same feel for your organisation auditing under different circumstances. The second image is entirely frivolous, I'm afraid. It did come up when I searched for the word cave, and it reminds me a little bit of what I look like not having had a haircut for 2 months, but there we go. Moving on to the more serious stuff again on the next slide. So down in the bottom there you can see since I was a young trainee, the 4-letter acronym for what the audit assertions was grown into quite a sort of plethora of different things we need to think about during an audit. Some of those are things that under the current circumstances we can address almost exactly the same way we always have. So if we're trying to demonstrate that a transaction really occurred, or that something is being presented accurately at the right value in a set of statements, we can ask you to send us a copy of an invoice, and that's relatively straightforward as long as you can get to the invoices yourselves. If we're trying to demonstrate, though, that the information you've included in your accounts is a complete representation of what went on in the year, quite often we have to access documentation outside the accounting system, so things like your booking records or summaries of takings in shops, for example, and trying to access records like that where there's a huge amount of information that we would normally go and access and pick a few items from to follow through into your accounting records can be quite a challenge to do remotely. So we're having to think of more imaginative ways maybe of interrogating some of that information. And then existence, which sounds like a fairly easy thing to verify, but if you tell us you've maybe built a new toilet block during the year at your offices without actually going and seeing it, and this does take me back to my training. One of my colleagues when I was a trainee found out that the alleged invoice for a toilet block was actually one of the director's thatched roof at his house. So things like fixed assets, we do like to see the actual thing itself and verify that it exists. So in terms of audit practicalities, there are a lot of things we can't do in the way we might normally do them, and things that'll irritate you if we ask you to scan them and send us over, for example, things like very large contracts you've entered into during the year. A common one that's been highlighted is stock taking. Now, for a lot of organisations where you've closed down completely since lockdown was announced, then actually it makes sense to just postpone the stock take till around the time you come back to work and assume that unless somebody's managed to access it and take it away, the stock is pretty much as it would have been back at, say, the end of March, if you've got a March year end. But for other organisations going further into the year where maybe you'll still be trading, but we're not necessarily able to access your premises for various reasons, we might need to be more imaginative. Another practicality is simply access to the right staff, and this might be because the people that we would normally talk to are not in the business at the moment and are forbidden from working because they're on furlough. It might be just simply that we're not accessing your offices and arranging impromptu conversations with a range of people like we might normally do during an audit is more difficult to arrange. Although, as we've mentioned, things like Teams and Zoom can be really helpful for organising those things in a different way from normal. There's been a couple of mentions already of post-balance sheet events, and I think the point's already been very well made that for those of you with maybe December year ends, the whole implication of what's happened with COVID is a post-balance sheet event for most organisations, whereas for those of you with March and later year ends, it's something that happened during the year we'll be looking at. But I think really just to say that there will be a much greater focus on those kind of accounting issues that Archie was looking at, where things have either happened since the year end, which give us a different view of what the financial position would have been at the year end. So things that actually change what we have to include amounts at in the accounts, or additional disclosures. And I'll very specifically talk about going concern in just a second. But I think it's right just to warn you that as part of this year's audit, there'll be a bigger focus than normal on what's happened since the year end than maybe normally would be. And that the key point on this slide is flexibility and of timing, but also of approach, and that's a really part of what the discussions we'll need to have will be. So on to the next slide. So the biggest area, I think, for a lot of organisations as a result of COVID-19 is simply going to be, is the disruption and the uncertainty caused by this going to be so significant that it'll actually bring into doubt the organisation's ability to carry on into the future. I'd really just like on this slide, though, to look at that grey box at the bottom, which comes from the auditing standard ISO 570, which tells auditors how to carry out their consideration of going concern. And the key thing that does really is it emphasises that we really are talking about an accounting assumption here, not whether your organisation is more likely than not to survive, but whether it's appropriate for you to prepare your accounts on the going concern basis. And what it says in comment A at the bottom there is that virtually every organisation should prepare its accounts on a going concern basis, unless you actually are going to wind it up or have no choice but to. You should prepare your accounts on a going concern basis. The key question is whether there are material uncertainties around that, your ability to continue into the future, that you need to disclose. And it's those that we'll really need to have a conversation around. So in the face of all this greater uncertainty, Anne's question was around the three scenarios. It's likely that the difference between the best and worst case scenario is much, much wider this year than it would have been in other years, and that there's an awful lot of information, as Amanda highlighted, an awful lot of information that you really should disclose to enable people to understand how you came to your judgment around going concern. So going on to the next slide, which I'll deal with really, really quickly because I'm aware we're quite near the end of the session. That really just spells out what the outcome of our review of going concern is. So The form of the debate or the conversation around going concern is that the trustees are responsible for determining whether the account should be prepared on a going concern basis, for deciding whether there are material uncertainties around that need disclosing, and then we have to do enough work to satisfy ourselves that you've come to the right conclusions. The most common conclusions, one would be that you are a going concern with no significant uncertainty. That would mostly apply to organisations that either aren't very disrupted by COVID, some of the ones that we've already mentioned today that are actually increasing their activity and income because of it, or much more commonly, the organisations that have got very large reserves and will, charities that have been around for centuries and will see COVID as a sort of blip along their path, much the same as world wars and plagues in the past have been. However, for some charities, there will be a material uncertainty. There will be a number of those scenarios you might have looked at that would indicate that if that scenario came true, that the charity would have to wind up. And that's when you're really in the territory of you will have to disclose those circumstances. And in our audit report, we will highlight that it's very important for a reader to understand those circumstances. What all this means is that we'll have to have a much deeper conversation with you about going concern, most of you, this year than we previously have had. You all have to be very clear with us how you arrived at your conclusion about going concern and whether you needed to disclose uncertainties. As already been highlighted a couple of times, you'll need to set out the basis for reaching that conclusion, the kind of assumptions you've made about COVID disruption, etc., unless you believe there isn't any, and you've managed to persuade us that's the case. And also, you'll have to disclose those uncertainties. In terms of audit evidence, and I've highlighted here, this is a good dry run for what will happen from next year onwards anyway, because the auditing standards around going concern have been beefed up because of some readily apparent failures of some auditors to look at it very closely in the past. In the future, we'll have to discuss how you reach your going concern conclusion, how you assess your viability at the planning stage of audits, and require you to produce a signed off statement showing what evidence you considered to demonstrate you're a going concern. And that's pretty much what we'll be asking for as part of this year's audit, and except in those very rare cases of organisations where it's obvious you are a going concern for reasons of huge reserves, etc. I'm going to wind up there because I'm conscious we haven't left very much time for questions, and I apologise for my incompetence earlier on of getting my speech started. And
Thanks very much, Ed.
Sorry, Kath.
Thanks very much, Eddie. We have time for probably just a couple of further questions. There are a couple of accounting questions that have come through. So the first, should furlough grant income be shown as restricted income? Saatchi, I don't know whether you'd just like to cover that one.
Yeah, thanks, Kath. Yeah, it's a relevant point, and we've taken, not we, but the guidance certainly from the Institute of Chartered Accountants is that actually it doesn't create a restriction. So you would not treat it as restricted income. But for clarity and transparency, I would certainly suggest that actually you disclose how you're treating that income. So it's very clear that you're treating it as unrestricted in the accounts.
Thanks, Saatchi. And actually another accounting question, Saatchi, you may like to take this one as well. Contracted commitments for works and purchases this year that have not been completed this year due to COVID, can these costs still be charged to this year's accounts?
Yeah. Thanks, Kath. Yeah, it's again another relevant point, and it goes back to the point I was making that actually from the sort of recognition criteria for income or expenditure, that piece hasn't changed. So in this instance, if you're not receiving the goods, you're not receiving the service by the year end, that wouldn't make it an obligation to recognise in the accounts at that year end. So it's really at the point at which you receive the goods or the service, and if it happens to be the next financial year end, then you would recognise it in the next financial year. So this year you may have a sort of a recognition which is different just because you didn't get the items due to the closure of the organisation. I hope that answers the question.
Great, thanks very much, Saatchi. We've now come to 5 o'clock, so we will end the webinar there, but thank you very much to everyone for attending today. For those of you who have raised questions that we haven't come back on in the session, we will respond to all of you afterwards. And as we said earlier, we will be circulating the slides as well, so you have those for the record. And you can even watch it again as we have recorded this also. So many thanks again. Thank you.